Hey, what is going on, tycoons? What up, traders? Super excited for today's video. We are going to be breaking down DAG, okay, ticker symbol DAG. This is Constellation Network. This one was a viewer request, so if you have any requests, please make sure to comment down below. And if you're new to the channel, smash the like button and subscribe because I'm going to be uploading videos just like this one every single week where you're going to learn a lot and you're really going to understand, okay, certain entries and certain exits using a couple indicators, right? The two that we're mainly going to focus on today are the fib retracement levels. All right, that's going to be these three levels right here. All right, I'm going to give you examples of them being valid support and resistance levels, how you can use them yourself. And then we're going to go over divergences on the relative strength index as well. That is another good indicator that you can use for either an entry or an exit. So all I need you guys to do is, again, just smash the like button if you learn anything new and subscribe to the channel. All right, so let's jump straight into it. And the first thing I want to highlight is these circles. Okay, so these are going to be lower lows, right? So we're going lower, low, we have a lower low, we have a lower low right here. Well, if we look at our relative strength index, right, we can see that it's actually flat. Okay, so while the token is going down and decreasing in price, the strength of this token isn't going anywhere, right? So it's holding its strength. That is a slight bullish divergence, right? Because it's flat right here. So as it's gone down, the token has held its strength, right? And we've gotten a bounce off of this trend line right here each time. Okay. And if we take a look at the bounces, all right, this first initial one right here, that was about a 25% move. Okay. Nothing huge, but still, you know, a 25% trade is very nice. And then if we go ahead and look right here, okay, that ended up being a 45% move. So those are two signals that you could have used. And then, you know, with some risk management, right, you can get out of the play with profit, right, with a 5% stop loss, a 10% stop loss, whatever it is. But using those signals, you know, you could have had two different entry points right there. Okay. Now, the reason that we're looking at these three levels right here is because what we're doing is taking our swing high up here and connecting it to the swing low down here. And no stock, no cryptocurrency is going to move in straight one direction, right? What's going to happen is it's going to retrace and it's either going to continue the trend or it's going to break the retracement levels and look to start a reversal, right? So if we look here, we already had our sharp move to the downside. We came up and got rejected, okay, right around the 38.2 retracement level, right? So that's using this tool right here, the fibs. And the three levels that I look for on retracements are the three most common. It's going to be the 38.2, the 50%, and then the 61.8% level as well. The 61.8 is known as the golden ratio. It exists all throughout nature, the stock market, the cryptocurrency market. And you know, most of the trading done in these markets is done by algorithms. Okay, so what you want to do is you want to think like an algo, right? And use some of the numbers that algos are going to use and use some of the formulas that algos are going to use. So we can see already that we did reject at our retracement levels and we're continuing the downtrend. So in order for us to break this downtrend, we need to break through these retracement levels, right? So we may get a bounce, but these three levels are really holding us back. Now, the opposite of a bullish divergence, okay, is going to be a bearish divergence. So look at this box right here, okay, and it's basically just a consolidation box. So for the sake of it, let's just say that this is flat, all right? We're flat in this period, but we take a look at our relative strength index right here. We have a high, we have a lower high, lower high, lower high. So the relative strength of this token has been dropping and falling as we've consolidated sideways and really gone nowhere, right? We've just stayed right around the same levels, but the strength of this token has dropped dramatically. Okay, that's an indicator that you may see bearish activity in the future, right? Now, none of this is meant to be financial advice. This is really just meant to be informational, educational, and, you know, tell you guys some of the things that I use when looking for signals for an entry or an exit, right? Now, an example of a valid retracement level is going to be over here, right? And if we take a look at our previous swing high and then swing low, right? We have our swing high, connect down to the swing low. We see we come down, we come back up and look exactly where we hit, right? We find resistance at our 50% retracement level, right? And then on top of that, we get bearish divergence. So now we're combining two signals, right? because we know that we're looking for a signal of a possible rejection at these three levels, right? The 50%, the 38.2, and the 61.8. And then we get a bearish divergence. So now we're using the tools that we have to combine each other and give us more confidence in our trade, right? So we come down, we get a perfect retracement to the 50%, and then we continue the trend lower. Okay. Now before then, right, we did get another example of some bullish divergence, right? And that led to a very nice move. Okay. We have a low here, we have a low here. Clearly we're in a downtrend. Okay. But we have a low here, equal low here. So the relative strength is remaining flat, right? That's another slight bullish divergence. Okay, as the token is dropping in price, the strength of the token is not dropping. That's an indicator that you may see some bullish activity in the future, and we get a very nice little rally as a result of that, right? And that ended up going up about 145%. And where do we find resistance? Again, right there at our 50% retracement level. Okay. And we really start to see this, these patterns really just repeat themselves over and over, throughout the chart as we go back in the history, right? We have a low here, low here, low here, okay? And look at the relative strength index, right? Bouncing off of this trend line, slightly increasing, going up. So the relative strength of this token is going up, right? As this token is in a downtrend, all right? And as a result, we get another nice bounce right here from those lows up to the highs. That was 91%. Okay, big moves, right? And then what do we have here? We have another example of a rejection off of a retracement level, except this time we're rejecting right around the 38.2 level. Okay, so we're coming down, we're retracing, and then we're continuing the trend. All right, so now that we've gone over those, we're going to start combining and looking at some chart patterns, right? So we're going to go over some very simple patterns known as the flag, right? You have a bear flag and you have a bull flag. And then we're also going to look at a wedge, all right? So if you made it this far, smash the like button, okay? Because we're going to continue, and now you're going to learn a little bit more, okay? So these are the flag patterns that I was speaking of. So if we look right here, this is going to be your bear flag. Okay, so we have a sharp move to the downside. That's your flag pole. Okay, and then here's your flag, and it's going to be this channel right here. Okay, now there's a couple ways to draw it. This is the most technical way to draw it, is with a channel. And this channel is basically the absorption of this sharp move to the downside. Now, as soon as you break this trend line on the bottom of the channel, you can expect to see a sharp move to the downside, right? And that's going to be your bear flag breakout. Now, the opposite of that is going to be the bull flag, right? And bull flags are very common in cryptocurrency, just as bear flags. So these are some easy patterns you can really start to learn yourself. Now, one thing I want to show you guys is that, again, once you start to combine things together, we looked at the fib levels. We saw how they were valid resistance levels for the retracements and the continuation of a downtrend. But now that we're more back in the past of the chart, we can look and see when we were in the bull market, we can see that they were very valid support levels, right? So if we take the swing low down here, connect it up to the swing high up here, we can see, again, nothing is going to move in a straight line. It's going to come up, retrace, and then continue the move, right? If we take out these levels, then it's not a retracement, and we're looking to come back and possibly start a reversal, right? But that doesn't happen. Look at where we find support, right at the 38.2% level. Okay, so we come up and we actually form a bull flag, right? So now we have our bull flag, we have our absorption of this big move to the upside. We break this trend line up here to the top, and we get an explosive move, right? So not only do we have the retracement, but we have the bull flag. We'll combine those together. This lets us know that we're in a strong uptrend, that we're continuing the uptrend, right? And then we get our actual breakout. So you can enter here off of the 38.2, or if you're more conservative, you can wait for the breakout of the bull flag. So that way, you don't get caught up in the chop, right? Some people are, very technical, and they just want to get in and out of stuff. And, maybe they just want to catch this little move right here, and they're not looking to catch, the whole entire thing, right? And we can just see that that continued to happen. All right. That basically just happened over and over, right? We're looking at the retracements here. We get another clean bounce, this time off of the golden ratio right here, the 61.8, right? So we come up, we retrace, we continue the uptrend, right? We come over here, and now we can start seeing some examples of some bearish divergence, right? So over here, we're in an uptrend, and the token is going up in price, right? Where we have a high here, and then we have a higher high up here. Well, look at the relative strength index, right? We have a high here. We're creating a lower high, lower high, lower high. So as this token is going up in price, the relative strength of it is dropping. Okay, that's an indicator you may see some bearish activity, right? You want these things to not have a divergence, and you want them to flow together. And as one goes up, the other goes up, and as one goes down, the other goes down. But once they start to do something different, that's when you get those divergences, and that's when it gives you a little bit of an indication whether you may see some bullish or bearish activity, right? And if we look at from the highs down to the lows, that was a very big drop, 75%, right? And you had your signal to say, okay, well, you know what, maybe it's time to get out of this trade. I'm seeing some bearish divergence. Let me protect the trade, protect my profits. Or even if you want to be more aggressive, you can try to short things, okay? So over here, we're seeing some more examples of the things I was just going over, right? So we'll really break these down real quick. So what led into this really, really big, massive move, okay, was really some bullish divergence, right? So that's what we initially had, where we have low, low, low. We're in a downtrend. We're decreasing. The price of the token is going down, but the strength of the token is going up. We're in an uptrend, okay? And that's our bullish divergence. We combine that with a bullish chart pattern known as a descending wedge or a falling wedge. And so now, that's our edge, right? We know that bullish divergence is something we can use. We know that chart patterns are something we can use. Now we have two things lining together to give us, an indication of some bullish activity with the chart pattern, right? The bullish chart pattern and then the bullish divergence. And what do? We come out and we start bull flagging, right? And this is another way that you can draw a bull flag. It's a little bit more simpler, right? You have your flag pole, and then, you have your little flag right here. But take a look at what we're doing. Perfect bounce off of the 50% retracement level to the T, right? We come up, we get our bull flag, we retrace, all right, and continue the uptrend. And then what do we do after that? Well, we get our bull flag breakout and we actually form another bull flag, right? And what do we do after that? Well, we come up, we retrace, and we bounce right around the 50% and 61.8% level on the fibs. So we know that, all right, well, we're in trend continuation. And what do? We eventually get the bull flag breakout. We break out past the trend line and get a very sharp move to the upside. So that's what I mean by combining things, right? Once you combine signals and you combine some of these tools that we're using, again, really in this video, all we did was look at the Fibonacci retracement tool, okay? And we looked at three numbers, the 38.2, the 50%, and the 61.8%. And then we looked at our relative strength index and we looked for divergences where the relative strength is doing something different than the token, right? It's, let one should be making lower lows, and if the other one is making higher lows at those same points, that's a divergence. If one is making higher highs and the other one is making lower highs, that's a divergence, right? And these are things that you can start to combine. And once you start to do that, and then you use chart patterns, right? Now you have three things to give yourself an edge. Trading is very, hard. It's like going to battle. Investing is like going to battle, going to war. You need to have as many weapons as you can, and you need to have the proper weapons. Okay, you can't bring a knife to a gunfight. And hopefully after this video you guys learned something, and are going to be more prepared for your next battle. Okay, now if you enjoyed this video, don't forget that I do viewer requests every week, so make sure to let me know down below what cryptocurrency, what stock, what token, what things you guys are looking at. I'll be happy to chart it up for you, give you guys my opinion. And again, if you made it this far, subscribe to the channel. I'm dropping videos like this every single week, about 5 to 15 videos. And don't forget to like, okay, because it really helps the small channel out.